Hey everyone, welcome back to Corporate Decoder. Today, I.G.T.A just filed an 8K report, and I think it reveals a significant shift in their strategy. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing shows they are walking away from a big Nasdaq listing plan, and it might tell us something about their future. So what is going on with Inception Growth Acquisition Limited, or I.G.T.A for short? They filed what is called a Form 8K, which is basically a report for big, important news that isn't scheduled in their regular financial reports. The main story here is that they've decided to withdraw their application to list on the Nasdaq stock market. Remember, I.G.T.A is a special purpose acquisition company, or SPAC. They are formed to merge with another company, and usually the goal is to get that merged company onto a big exchange like Nasdaq. Back in September 2023, they announced a deal to combine with a company called AgileAlgo Holdings. Limited as part of that plan, they applied to Nasdaq to have their combined company stock listed there, but on the 14th of April 2026, they announced they're pulling that application. Now, this withdrawal doesn't mean they're delisting from where they currently trade, which is the OTC Markets Group. Their units, common stock, warrants, and rights will continue to trade under their current symbols, IGTAW, I.G.T.A., I.G.T.A., and I.G.T.A respectively, on the OTC. What this tells us is that the Nasdaq dream is on hold, but they are not giving up on the merger or finding a place for the combined company to trade. They are now looking at other options for listing. This could mean another exchange, or perhaps even a different path forward altogether for the deal with AgileAlgo. This move might suggest some challenges or re-evaluations happening behind the scenes. SPACs often face pressure to complete their mergers within a certain time frame, and sometimes the path to a big exchange listing can be more complex than initially anticipated. Pulling the Nasdaq application could be a sign that the merger timeline is being pushed back further, or that they are facing hurdles in meeting Nasdaq's listing requirements. Adding to this, we've seen recent news about Inception Growth Acquisition Limited extending its business combination deadline and contributing additional funds to its trust account. These actions often signal that the SPAC is working hard to meet its obligations and keep the merger alive, possibly because meeting the original terms or deadlines proved difficult. Now, let's look at the potential impact on shareholders. The securities themselves are quite complex. They have common stock with a very low par value of just $0.0001. Then there are the redeemable warrants, which give the holder the right to buy common stock at an exercise price of $11.50. And finally, rights where holders can get 1/10 of a share of common stock. The fact that they are withdrawing a Nasdaq listing application is a pretty big deal. For many SPACs, a Nasdaq listing is a key part of their value proposition. It offers more visibility and often greater liquidity for investors. Not getting on Nasdaq means the public perception might shift, and it could make it harder to attract certain types of investors in the future. Historically, we've seen that when SPACs delay their mergers or face listing hurdles, it can create uncertainty. For example, many SPACs that have gone through extended periods of uncertainty or failed to secure prime listings have seen their stock prices underperform significantly. Going from a potential Nasdaq listing to staying on the OTC markets is a notable downgrade in terms of prestige and often market depth. It's similar to a company aiming for a major league debut and settling for a minor league season. Instead, about half of microcap companies that have faced similar listing challenges have eventually seen their stock prices decline by another 40% or more. A hypothetical $1,000 investment in such a situation could shrink to around $600 or less over time due to sustained uncertainty and potentially lower investor interest. The signatures at the end, signed by Chu-Kang Chow, the Chief Executive Officer, and dated the 17th of April 2026, confirm the official withdrawal of this application. This filing provides a clear indication that Inception Growth Acquisition Limited, along with its partner Pubco and the target company AgileAlgo, are navigating a more complex path than perhaps initially planned to bring this business combination to fruition and to the public markets. What this means for the company's direction is a period of continued re-evaluation. They've shown commitment by extending deadlines and adding to trust accounts. But the Nasdaq withdrawal introduces a new layer of uncertainty. The key here will be what alternative listing venues they find and how that impacts the overall attractiveness of this merger for investors. My biggest concern is that this withdrawal might be a signal that the original merger terms are proving difficult to execute, or that the market conditions for the combined entity are not as favorable as initially hoped. We need to watch closely what alternative listing plans emerge, and if they can successfully bridge the gap from their current OTC listing to a more recognized exchange, or if this deal continues to face delays and potential restructuring. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this information helpful, please like this video, subscribe for more, and join our Discord community for further discussion.